Good morning, everybody. This is Chrissy from Solstice ATR and Balkan Capital Research. This is Sunday, August 25th, and I would like to start this video by calling it, is this the real tariff war between Asia and the United States to cause an action in the market to the downside or is not going to be resolved? Let's take a look at the overall market by looking at the SPX Fortune 500 company, the Nasdaq, the Russell, and the Dow Jones Industrial Average, a combination of the four instruments. What I'd want to mention on the weekly chart, we had this wider channel. We had a minor one inside here. I took it off. This one's no longer valid, which we don't really need at this point. Let's remove it. Just let's concentrate on these wide channels. On the weekly chart, it looks like we tried to look above on the area of the 38,600, 650, couldn't get above it, and eventually we fell through back from the 18 SMA back to the 50. We had an up move, a medium range move under the other one, which has had a higher high. Here we had a lower high, and eventually we tried to close on the combination of those instruments. And the August month is not already done yet. So this bar is a little bit more bearish. It's more like an engulfing of those three, but eventually we haven't cleared the bottom. That 50 simple moving average in that channel is holding us up. But where are we probably heading? If you take this, consider this a square, the distance between here and here, we can double it down to here. Eventually we can fall through the 38.2 and eventually fill 100% of the gap, and that would be around the 116 SMA. And what are we going to do is put an oval mark right there. We'll make a small one for where we can head to. Okay, there's the oval. We're going to mark it right in this area so everybody can see it. This is the weekly bar, and this is where I think it would eventually head to if we lose the 38.2 fib. Let's go to the daily chart and just show you something a little different in that box. As you can see, we tried to go up, come back down. This is a technical, short-term bounce on this channel. We bounced up, couldn't clear this 38,670, 72 area. We went a little bit under. This is a lower high. And we turned on Fridays. The news was that the Federal Reserve Board were going to help us on Friday morning. And that day, during the day, Donald Trump tweeted, I don't want to get into it, that there's going to be, because of the Chinese increased the 5% tariff on the United States goods, he retaliated by saying, hey, the September 10%, I'm going to increase it to 15 in the event that $250 billion, and it caused a reaction to the downside. If this is the deviation making an M pattern and eventually losing that bottom, first fib is here, second fib is down here, which is the coincidence with the 35,800. And you can see I marked it with an oval, and that would match the same distance from here to here. If I take a Fibonacci, I just want to show you something that you guys will understand. Just a hand-drawn Fibonacci, we can grab this area here to this one here, and we get the extension to the bottom. Where is it? The 161 and the 178, right in that area. So keep an eye on that level, and let's start by breaking each instrument one by one. Let's start first with the S&P 500. 45, look at the daily chart, it's coming up. It looks like we have an M pattern. Come on. That M pattern, we tried to look above that 29.44 area. We couldn't get it. I had an oval here. Remember, on last week, I was a little bit more bearish in the market. What happened? We get the push up, get a down day, a push up. We're thinking, eventually, testing 1, 2, 3, eventually get a breakout and fill this area. We didn't. We couldn't clear the 50 simple moving average. We tested the 61.8. You noticed that we tested it here a couple of times. Couldn't hold and eventually fell through the 50 fib, the 38.2, and we tested this smaller channel, but we're still in an uptrend on this side. If you can see this, we can draw a small channel. I want you to be able to recognize this. There's a smaller channel in here from this high to this instrument to this higher high, and you can grab one from this high to this one here, right here, and you can see if we're going to fall through it, eventually we'll get to the 200 SMA, part of this candle, fill the first support area and get to the bottom of it. And let's just do a drawing from this area to this area on a Fibonacci so you can guys get to see it. We're going to fill it looks like they want to fill 100% of that gap. If the trend does change, they don't agree on a meeting, in September. And remember, in Hong Kong, there's, a little bit of, public, not really rioting, it's just, um, they doing a little bit of, hey, we don't want you guys to do this to us. If China gets involved, Donald Trump saying, hey, there won't be any deal on China. This may set up the, the trend to the other side. So we have to keep an eye on it. And let's just do it the other way. Okay, that's that. And let me show you to the bottom where it looks like. And that really matches this area here. That, 27,040 area, 27. 25, 12 area would be the main one because this will match this area down here. You get a control point. We have a wider one from back here. Let's just take a look at the NASDAQ, and I'll break down the volume profile later on the ES and Q. It's in the same shoes as the S&P. Come on, okay. We looked above, couldn't clear it. We're a little bit higher than the S&P. Does it fill the gap to this channel, hold the 200 SMA, or fall through support to fill this gap down here? So we're going to put a little oval here. We'll just leave it alone. Let's put an oval. That's the first fib. And let's take a look at the Dow. The Dow is in the same shoes, tried to look above, eventually failed. We still have this channel holding us up. It would fill the gap, first one here and second one here, because we could not get up to the 50 SMA. If you notice, when we got up here, we couldn't get to the 61. We got above the 50 Fibonacci and eventually fell through on that noise. Let's take a look at the Russell. RTY. This is the canary in the mine. I always like it because it leads the market in the direction that we want to look for. So if we look at it, the Russell couldn't get the prior high, had a higher high, higher low, and here we had a higher low from the prior high, but we had lower high, higher high, and eventually we fell through. We missed it. We're holding this channel. If we fall through this support, you can see that, I was expecting, the Russell to get us back to this oval, to the 61.8. It couldn't even get to the 50 Fibonacci and it fell through. So I think the backside of this channel would be the first target, which is down here. We put a little oval on it. Okay, everyone? If we fall through that bottom, okay? If there's no deal done, I think this area will fill 100% of it and eventually get to down here. So let's take a look at some of the equity instruments in the market. I'll start first with AAPL. And Apple has the tendency to basically show itself, because of the tariff, because there's some of their productions coming from China, on their, computers, Apple and stuff like that. If you look, we have an up channel here, which we may have violated or not. I'm not looking at it. Let's take a look at it, see if it's still intact or it fell through. Come on, here. It's basically touched it and bounced off. Oops. Little bit an error on my end. Computers, automatically remove drawing. We'll just redo it again one more time. There we go. So we touched it, we bounced off. We're underneath the 50 and the 38.2. This was the downtrend from prior. We have one down here, if you noticed. The other, channels are no longer valid, the ones on the top. Come on. These two are no longer valid. We were inside them on the earning report. We punched up and eventually fell through. Then we tried, to get something going on. I'm going to keep this one up here. If you noticed, we are in a, an open down channel. This is the midpoint of it. Do we reset here? If the tariff going to show up, we can fall through the 116 and eventually fill this gap and come back to the 50 SMA where this consolidate. Remember, we have a big gap down here. If this doesn't work out, that symmetrical triangle, we fall lower, basically back to the downside down here where we started to move here before the gap. Okay, let's take a look at Amazon. Amazon a little bit looks like an M pattern and an H, and we fell through that 1750 area. Let's call it. I think eventually the gap fill is 1672, and I will put an oval right here on it, so that way everybody knows if we don't have any more strength in the market. It can be a good leading indicator to show you part of. It's like an indicator. Amazon, Apple, you know, the Googles of the worlds, the Netflixes, the Teslas, because you can see what's going on when there's a change in the trend, if they really like it or don't like it. Let's take a look at Facebook. You notice Facebook fell through. Eventually, you know, the 200 SMA in this area has to hold where we started the move, or we can fall eventually to the bottom side of here. If you take the distance from here to here, you double it, it's about down here. So this is where the oval is. Let's make it a little bit better, remove it, and just do it a little bit more cleaner. Should be down in this area. There we go. Let's take a look at Google. Google looks a little bit more weaker. Those channels are no longer valid. I'm going to remove them. Remove drawing. Remove. Come on. Trend line. We're going to remove this trend line. No longer valid. You can see him. Remove drawing. We'll keep this one on. I have a down channel from here to here. Let's draw that one and show you what we're going to do. Come on. Let's go. So we can grab this candle here. This is the prior high. Higher high. Connect them. That's down channeling. We touched it, we couldn't get above that, and we fell down. We're holding the 50 SMA, we're underneath the 18 SMA. If this is going to fall, the first target is the distance from here to here, these distances, which is the high and low. We can measure it and double the distance. Remember, I had this box from way back there, so we're going to remove that box and put it to the right side. Remove drawing. We're going to put an oval right in this area. This is the downside of that channel, and you can see it happening in Google, because you know eventually it can fill this area here, which is, you know, the 1100 area, 1120, which is the gap. You can see here there's a gap in Google. That low is 1095.33, and so basically what we're going to do is put it right here. This is where the gap is. So that way you guys are aware of it. Let's take a look at Tesla. Tesla, you know, it's in those up channel. You can draw a channel down here from this area, you know, connect it down from here to here. Eventually we can fold down to this area 186 where we started the prior move, because the distance from here to here, if you double it, it would be down here, okay? So we're going to put an oval first on this area first before the second one, because this is a good consolidation, 186. The major one would be just a little bit underneath it. Look for a buy in Tesla if the market heads down, because you're in a cone, or you can draw a channel from this one to this one, eventually fall through it. What we can do is grab a channel from point A to point B, and the distance, once you fall through this, you double the distance, you eventually get down to here. Let's take a look at Wynn Resort. That's in the casino. Similar situation, we had the push up try, we got a higher high, eventually fell through, filled the gap. If this thing doesn't hold, so you double the distance, because this area, that 102, won't be any more salt, because that was a prior old channel a long time ago on Wynn that was holding in that support, you know, from way back there. We're going to fall through it, and we fell under it, so the distance from here to fill the gap would be basically in the 90s area, and we can put an oval right there. So I'm going to break down now, go back to the S&P and break it down a little bit to give you a better idea. And I want to go back and talk about, you know, creating some kind of a move to the downside. You can do like a butterfly, you know, +1, -1, +2, -1. So that way you can be in the range of any product you're trading to see if the trend is changing. That distance from here to here, you can double it, and it's eventually down to here. That's on Wynn. Let's go to the ES and break it down a little bit on a faster time frame. Okay, let's just zoom in from here. Okay, we're going to take that Fibonacci out of the way. And those, basically those ovals that I had here is too much information, but we'll keep it away. We'll join. Okay, so if you look at it, we created an M. Let's take a look at, see if we can look at it on a faster time frame. Let's do an hourly chart. If you notice, we went up, couldn't continue to the upside. We fell through. Where did we test? The 28.23. If you notice, that area has been very important area. This time, if we fall through it, because this is the up channel, remember it's moving up. If we can fall through it, eventually we'll fill the gap down to this area down here. That would be the first area where we had this gap between here and here on the open and took off. You see it? We had the trading hours. We can fill it up and eventually come down to that 27,000. And eventually, if we can go lower, it would be harder, because if you look at it here, the volatility of the 29.05 area, 02, when we lost it, we retested the 04 in the overnight, and they lifted it, and eventually we fell through hard. We retested one standard deviation, the 2882 to 2890 area is basically empty space here. This is very empty, and I can show you why on the volume profile. Let's go look at the style. We make this into monkey bars. This is on a daily chart. If you notice, this is the value area high, value area low, and the POC of the profile. And this is where most volume, where most volume is, and that's the POC. Where are we? We're underneath that POC, tending to where? Eventually fill the gap in this area. But let's break it down on a hourly chart, which shows you a little different volume. Let's minimize this a little bit. And we come in. Okay. That move up, coming back down, move back up. We had this prior, POC from before. We never tested it. We only got to here. And on the way down, to see this area here, this is a gap in the volume profile. Let's just zoom in to show you. When we fell through, basically falling through that area, created a vacuum from the 29.98 area all the way down to the 28.88 area. There's not much volume, so this one is going to act as resistance. If we come back up here and we cannot get above it, I don't think we're going to go back to the 29.30 very soon, unless something happens on the deal in September and China does something about it, or it's going to cause a market reaction to go lower. So this area is going to be shortable if we cannot clear it and eventually fall through and continue lower. You never know if this afternoon will basically fall and continue lower due to the market trend. If we go back to the daily, let's look at it on a daily basis. That the Fibonacci, remember, we have the high, we have the low. Where is the 50% fib? That's a little bit too far. Your 38.2 fib should act as support on the way down. Eventually your main target is your 50 Fibonacci, and I think that would be a little bit underneath the 2700. And we can fall back all the way down to the prior, consolidation in this area that took us higher the prior year, and that 2460 area would be a major event if we fall to it, because that was the prior market closed the prior year, and that's where the Senate was in the 2500s. So if you notice, that was basically we pushed up, looked higher, and eventually we coming in on the volume profile. But let's go back to just a 15-minute bar, and I'll show you this really big gap. You can see it one more time. So, because then, in that Friday, everybody get me out. They pushed it down, and at the close, they dragged the market back up to close around the 28.51. And I called it in the afternoon. I said, hey, watch this. We're going to rally in the close. And everybody looked at me, no, because everybody sold their positions, worried about what's going on. And they just pushed it back up. We may open on a gap down. Let's see what the gap down does. or if not, we come back to this area. I would like to see this area here, the 2900, 2898 area, quarter to the 2892, 88 area. If it acts as resistance, then this is basically a shortable to the downside again, and that would be my thing about what the market outlook is for the following week. So I'm looking to be a little bit more on the bear side in the camp, because what the market has done has made a change in the trend style, and has actually, we did one standard deviation. This is midpoint TD Bull, the 2918. We fell through the 2900. We doubled the first standard deviation. My morning target was 2888. We fell through that area. Eventually got a little extension to the 2880. The TD Bull, basically, this is a study that gives me retracements of movement, and we double deviated down to the 2847. That was my second target of deviation. And from that, we looked a little bit under to the 42 area and came back up 38, and we bounced from the 42 back to close around the 51 area. So as far as I'm concerned, if this market cannot stay above the 29, 28, 80 to 90 and come back down and cannot get to 28.62, and we fall through the three bottoms that we had prior, we can look at them on the hourly. You can guys see them. Or we can go 4 hour. If you notice, this is bottom 1, bottom 2, bottom 3. So that 2317 area, you got this mark here, you got this mark here. We cannot hold this channel. We fall through it. It's going to be a major short, because it's going to fill that gap, and that would be our first target in this area, and eventually back to the 38.2 FIP. So I hope this was helpful. Look us up on YouTube. This weekly video is always offered to you guys for free. Just subscribe, hit the subscribe button so you can receive it on your weekly basis in your email, so you can take a look at it and enjoy it, and have a good week. Take care, and see you at Solstice ATR.